Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for our YouTube weekly update for Bitcoin, but we're also going to be having a look at Ethereum again today as well. But before we begin, do you want to learn Elliott wave theory? Well, if so, consider joining the Green Star Trading Patreon at either Tier 2 or Tier 3. You will unlock this 11-part series, which is a comprehensive yet easy to follow video format, teaching you everything you need to know about Elliott wave theory. Well, maybe you want to learn how to chart the way I do as well. Well, I have a series called My Chart, which is an ongoing series which I'll be adding to every month over the coming months, which covers exactly how I set up my chart on TradingView, every tool I use, every drawing I use, every object, every indicator, the whole lot. And we'll show you how to set it up the way I set it up. You don't have to do it this way, of course, but if you're interested, there'll be a dedicated playlist to this too. And finally, maybe you just want to learn how to trade the way I do with my technical methodology, using what I call the standard trade setup. There's a playlist here for that too. We also cover things like trading psychology and risk management. If all of this sounds good to you, then you can unlock all of it by clicking on the link in the description box below, heading over to the Green Star Trading Patreon page and joining Tier 2 for £10 a month. By doing so, you will unlock all of the playlists I've just shown you, as well as a whole raft of other educational content. You'll also get access to the public Discord, where there is a myriad of channels covering multiple subjects, which can keep you engaged and in discussion with all the other members of our community, including myself. I also host weekly live streams which can go on for hours at a time, where I'm happy to take suggestions and cover anything anybody wants to look at, as long as they make the suggestion in advance. But if all of that isn't enough for you, then maybe join Tier 3, where you get every single benefit I've just listed, but you'll also get access to my monthly dividend calendar and stock rating system. Finally, if neither of these appeal to you and you just want to support the channel by donating £5 a month and appreciate the work I'm already doing on YouTube, you still bag yourself an exclusive video each week. Thanks for listening, guys. We look forward to having you on board. Now let's get back to the video. Okay, welcome back, guys. Right, first thing I want to talk about before I get into the actual analysis today is I've had a few people asking me lately in the YouTube comment section, and a few emails as well here and there, inquiring about if I'm going to cover this asset or that asset on YouTube and why I don't cover more things. Now, the thing is, guys, I do cover loads of other things. I mean, just this week for the Patreon, last week I did an XRP exclusive. This week I did a 1 hour 50-minute exclusive on ZRX, PYR, XMR, altcoins, which literally just went up onto the Discord and the Patreon today. I did a 4.5 hour live stream yesterday where we looked at probably half a dozen stocks and half a dozen crypto. So I am covering loads and loads of stuff. It's just for my Patreons, who I prioritise because they're paying me at the end of the day. So I still intend to keep the usual updates here on YouTube. I've gotten into the cycle of looking at the markets on a weekly basis, looking at the two biggest cryptos on a weekly basis, looking at gold and silver and occasionally oil. Yeah, but that's really all the time I can find for YouTube if I'm going to devote the time I want to providing the value to my Patreon. So there's your answer to those who are curious. If you want to see more, then sign up. You know, I would advise, if you do want to sign up, wait until the start of the month so you get a full month's value, you know, which is only in a couple of days' time, and then you'll see for yourself the benefits of doing so. Right then. Now that's that said, let's get on with today's analysis. Okay, so we're actually just going to move over to the Bitcoin chart first, I think, then we'll come back and have a look at Ether. So, right then, trying to figure out what's going on in this final step down. Now we have our primary count here, which is a triangle, and of course we have our much more bearish alternate count, which is a WXY, where we expect to settle somewhere between 20 grand and it could be as high as 26, somewhere in that region. This last zigzag could be a simple ABC that's much shorter than the previous one. It could be deeper, so or it could be somewhere in between. So alternate count, I'm basically really just keeping an eye on this channel and seeing if it breaks down and if volume comes in to support the selling, if momentum continues to come in to support the selling, and then it's really a big question of what happens when we hit these lows. This is like a big liquidity pool waiting down here, and every time you come into it, we rally, come into it, rally, come into it, rally, and essentially, a lot of people get short right at the lows here, and then the market goes in the opposite direction. So we could see that again, and that would likely not play out in this bearish case. So that is the main reason why I'm still backing the primary, my primary of a triangle, because I believe that there is a bid underlying the market here. Excuse me. It may hold and provide support to the completion of this triangle, or it may break, in which case we've got an alternate count. So we're not going to get blindsided either way. Right, so now the issue comes with explaining the shorter term price action. We had a crack at this yesterday on the live stream, and just for those of you who are new, a quick refresh. What I'm suggesting here is just a primary wave 3 into a primary wave 4, and an A, B, C, D, E, looking for a final zigzag structure to play out here in the E. So what we're going to do now is just come down to the 4-hour order of the chart. We're going to look at some of the options we've come up with to explain this latest move down. So open the object tree here. Okay, so one of the ones suggested yesterday that I found quite interesting by one of our users on the Discord, Mr. Humanov, was looking at the possibility that we've had a move down here in 5 waves. Right? Some waves count pretty well. And then we've had a zigzag into an A, zigzag into a B, zigzag into a C, zigzag into a D, and now we're going to get a zigzag into an E, and this will be a expanding triangle. Now, it's one of those things where you've got several zigzags in a row. This could be the case, but we're not going to know until we get back above the C wave high. If we see another zigzag, it adds a lot more validity to this. I mean, idea here is that we're going to have a move to here in the A, a move to here in the B, and then a move to here in the C, with a B wave expanding triangle, and that will give us our final zigzag into the E to complete the 4 after what's been a very long and taxing and testing consolidation, very triangle-like in psychology, making us feel frustrated both ways. So what I'd expect to see here is, with this zigzag, I would not really expect it to come back to the upper trend. Expanding patterns, triangles, and often also you tend to see very frequently in expanding wedges, which we call expanding diagonals, which can be leading or ending in the first or fifth wave of a motive wave, or in the A or the C of a corrective wave in a zigzag. Okay, never in a flat, however, because it's 335 instead of 535. What we tend to see is that the final move fails to reach the upper trend line. Okay, but it still has to be longer. The E wave here would have to be longer than the C wave here, but it would likely fall short after getting further. Now, if you look at the downward trend we've got from the highs here, taking this high, and then we get a whole series of highs here, here, and here. That trend line looks like a very logical place to both get an expansive E and complete the B before coming down in another 5 waves. Now, so that's one idea, and I kind of like that. And it got pointed out yesterday that this kind of looks like a butterfly, essentially, that we've got going on here. But if we just come out for a little bit further and have a look at the overall idea for a minute, I would likely expect this upper trend to break. This lower trend line, this upper slanting lower trend line, I should say, to break in what we call a throw over. Now, in this case, it'd be a throw under for the E. Now, the E still can't come beyond the C. Okay, so that's a a cut-off point that we've got here, and we don't want to see that break down. Let's just, if that were to go, then this count as I've got it is wrong. So that's a level we can put on the chart. Let's just make sure that's accurate. 1032950 spot 72. So if that breaks down, then the idea of this being A, B, C, D, and E, if we go below that C, this is wrong, and we will upgrade the alternate count into the primary at point and expect lower pricing to come, challenging these lows if not breaking them. But while that C level holds, I would think that a breakdown of this trend would be ideal for an E. Right, has to come in before this level, but come down here and then get going. Now the reason I think that's the case is you'll have a lot of people, orders, bots, whatever, retail waiting to quit on this idea at this trend line, waiting to give up on it, and a break of it would generally be interpreted as bearish. Now if you haven't got triangle as an idea, you might think the breaking of that trend line is very bearish, but if it is a triangle, the breaking of this trend line would be very normal. A throw over in an E. It happens all the time, and it tends to run stops, right, and drag in liquidity right at the lows or right at the highs, depending on whether the E is at the top or the E is at the bottom. So that could happen. So I'm going to position it beyond the trend line, and we'll see what happens, but we need to see this pattern complete first. So that's one suggestion. Now things are up in the air at the moment because we have got what looks like an impulse and then a bunch of janky sideways shit, so it's a bit difficult to dig through this. But if we remove that idea, I've got a couple of other ideas. So this one is also in play. This is the idea that we've come down in the 5 for our A wave. We've gone 1, 2, 3, 4, 5, and we can get subdivision in the 3 here as well with 1, 2, 3, 4, 5, and we can get subdivision also in the 5 here as well. And then from there we've gone 3 into an A, 3 into a B, 5 into a C for a flat. So this considers the B wave already complete rather than becoming some big expansive pattern. It considers the B wave already complete. Now the only way I've been able to make sense of it from here is to kind of cheat a little bit, and on a smaller time frame I can squeeze a 1, 2 in here, 3, 4, 5 into a 1, then we get another expanding pattern into a 2, then we get another 1 and another 2 on a smaller time frame, 3, 4, 5, 3, 4, 5 into the C. Okay, so we're going to get 5 waves down, subdivision in the 3 there. Once again, going beyond this trend line, it could be shorter than that, but we can't come back beyond the 1 with the 4 here. So that's another possible interpretation. Like I said, until we do something clearer, because we haven't had the luxury of a nice clean impulse down here, or a nice clean diagonal, it's a bit of a mess. So it's tricky to get 1, 2, 1, 2, or just 1, 2 moving down in the 3. So it could be either of these. And then finally, I did have another idea, which was that it's a larger expanding pattern, but it doesn't require the expanding triangle. You know, we come down with a triangle. Basically all I've done is move a 3 down to here in the subwave count, so that'd be 3, 4, 5 into 3, A, B, C, D, E, small triangle here in the 4th down to the 5th, A, B, C into an A, W, X, Y. This is still kind of playing out with a second zigzag, it could be correct, and then finally 5 waves up in a C, back to the trend line for the B, and then 5 waves down in the C. So as you can see, once you're into this kind of sideways corrected structure and you're not certain that it's motive anymore, you get a whole bunch of options, and I can't tell you which it is. It's that simple. At the moment we're just going to have to wait to see how this plays out. I kind of like the expanding triangle idea. It gives us a little bit of funky symmetry. Contracting triangle here, expanding triangle there. I'm not saying like lends it any weight, I'm just saying I like it. Yeah, so that's as much to go to like as anything else. We'll put that into the, what's that, the number 2 count, my rather complex flat pattern with the double zigzag inside of it. So I think that was in the 2, we'll put that in the 2. So as you can see, a whole bunch of options, but what it boils down to at the end of the day is that you're going to have one final zigzag. Now how we do it, whether it's like this, okay, or whether it's the triangle pattern where we come down here, then we go A, B, C, D, E, then that, whatever it is, you're going to get a zigzag down here. Okay, and if we complete a zigzag prior to 32,950 spot 72 and we reverse, we're going to be wanting to look for our momentum indicators to come into support. A thrust back up into overbought conditions would be nice. Let's come to the day time frame just to see where the RSI is hanging around at the moment. Now you can see we've got divergence between lows in the short term at the moment, between these three lows here, okay, and these lows here. So we've got some bullish divergence going on, but that could be symbolic of this being a corrective structure rather than a reversal. Now, if we get some kind of impulse out of here, it just comes roaring out of here, then the level you're looking to break is the top of the D here. If that goes down, we've got some rethinking to do. Okay, let's get that accurate. I've got to get into the habit of always making sure these are accurate, because people have to be able to see them clearly. Okay, so I make that to be the top of the D. So if we were, for whatever reason, that bullish divergence here were to play out, the MACD crossover we've had here is very, very tiny, no sign of bullish momentum yet, but if this suddenly explodes higher and we get a low, higher low, another higher low, and we start to trend higher, and we get back above a zero bound and we start to trend bullishly with RSI and the MACD again, and we see an impulse coming out of here, breaking this D wave top is what we're going to need to keep an eye on, because at that point we have two options. We either have to jank a E wave into here early and get this to subdivide as a zigzag somehow, be my guest if you want to try and figure it out, it ain't pretty, or we have to shift the downward trend of the triangle over to here and suggest that the D's here. Now this is equally problematic. Now we can get 5 into here, something going on here, right? Maybe I don't think it could be a running flat, maybe as a B, and then 5 waves up into a D, and then we would finally come down for the E, and then blah 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 blah, so on and so forth. So these are the levels we're looking for. Now there is an alternative, obviously. If we take out that high, like I said, you may have already bottomed in the E, and you're just impulsing and you're coming up. Right. So we'll see. But I'm not really expecting that to happen. I'm not saying it's impossible. I'm just saying we need to watch for it. So you need to keep an eye on these two levels. Now, where did I stick those ones? Did I put them in this one? No, that one. Where are they? Oh, sorry, I'm being an idiot. There we go. I couldn't find that horizontal line. There we go. Let's put these as, what should we say, vital levels, because they break this pattern one way or the other. Go beyond the D, go beyond the E. We have to either adjust the triangle and make it count with all of this as a connective structure, okay, to get that zigzag, or we complete and we come flying out of here. So something to watch for. That's how I see it at the moment. Like I said, I can't really offer you any more here. Could be this expanding flat in the B, could be the triangle in the B, or it could be a simple extension in the 3 of the C. You know, that's how I look at it at the moment. All you've really got to keep an eye on, I don't think it's tradable for me at the moment. I haven't felt any of this really sideways stuff has been tradable. We're just waiting for some kind of completion. We want an impulsive wave out of all of this, and or we want it to break down so we can see these levels get challenged. So that's the primary. We've got the levels we want to watch now, so let's have a quick update of the alternate, then we'll come over and have a look at ETH. It's going to be the same story, basically the same story. Right, so all of this, instead of being interpreted as an A, you could interpret it as a 1. So everything I've just drawn here, 5 down into an A, B, C, into a flat, into a B, into a C, or into an extension of an A, B, C here, or into the little triangle idea, all of those are valid ways of getting into a 1. Right, so we get 5 down, and we go 1. Bum, bum, bum. 2 back here somewhere. 3, 4, 5, A. And this would be the most bearish way of looking at it. A, then a B, and then a C down for the Y, somewhere maybe around 20 grand. Right. Big, aggressive, bearish move, and really just looking for supports to break down at this point. Now, it doesn't have to be this deep. As I said, this could be A, B, C for the last zigzag back into these lows, and that could be all she wrote. That could be enough. Trap a bunch of liquidity, get a bunch of people short at the lows, drag them in, trap them there, provide liquidity higher. But we might as well consider a more bearish count, which is a big double zigzag. So a zigzag here connected to a zigzag here, like this. W, X, Y, and that's the deeper way of looking at it. So projecting off of log. Now, I'm not going to say that there has to be a relationship of 1-to-1. There really doesn't have to be. Okay, the function of a double zigzag is just to push price lower than the first zigzag achieved. That's 90% of the time. That's its purpose. Now, that could be a pip lower, right? And it still achieves its purpose, or it could be a fuck ton lower and achieve its purpose in a much more dramatic fashion. There is absolutely no way of knowing which one it is until you start to see the impulsive and corrective structure form, because you're either looking at an A, B, C done, or you're looking at 1, 2, 3, 4, 5 A, B, C. Okay, and just won't know until it happens. So really, in the meantime, rather than trying to guess at this, do we see this upward structure break here, this channel we're in? If this breaks down violently and starts heading down here, then maybe we can start weighting this as a bit more probable. But really, our focus in the meantime, I think, should be on the primary count. Let's just throw these into that alternate count folder. Focus should be on whether or not the primary count validates or invalidates. We're very close now to getting this E wave complete. We're not a million miles off invalidating the D wave's position either. So we're just waiting to see something happen here which either confirms or invalidates this idea. So now, before we move on, and we'll look at some basic technical analysis now as well, and some other things I find interesting. So let's come off of log for a minute and look at this sideways correction. So one thing I found quite interesting is if we just take golden ratio and 50 here, and we run up and down between the two, you can see how the 50 and the 61.8 back and forth are basically what's creating all of your support and resistance in this sideways move. Now, this is very kind of typical of a sideways correction, like a triangle. So let me just point out what I mean. So here's the 50 here, okay, then you come back up, here's resistance and support on the 61.8, here's support on the 50, here's resistance on the 60, here's support on the 60, here's resistance on the 50, up down, from down top to bottom, bottom to top. Same gig here, down to the 61.8, back to the 61.8, down to the 50, back to the 61.8, back to the 50, down, back to the 61.8, down, back to the 61.8, down, back to the 61.8, down, back to the 50, down. So you can see how the dominant pivots are determining support and resistance at 50% retracements and the golden ratio. This is so typical, it's unreal how frequently these levels come into play between major pivots. This is why whenever I'm setting up, I recently did a video for the My Chart series episode 6 talking everybody through how I set up all of my fib retracements and fib extensions, and one of the settings you can see that I have recorded in my templates, I have flat B wave, golden ratio in 50, SDS, so on and so forth, and it's the golden ratio in the 50, because I often feel, regardless of whether we're looking at wave 2s or wave 4s, A's, B's or C's, WXYs, whatever we're looking at, those levels are always in play, all the time. And if you're going to look for something, whatever, from one pivot to another, look for that, and you're likely finding very reliable support and resistance. So there's a little tip. Now let's have a quick look at this long-term pitchfork. That's a downward one. I want to find the... It's here somewhere. Here it is. Now this is interesting as well. So I've spoken about this multiple times. If we just bring up the long-term count for a moment, and I got it on the primary. Yes, I have the 1 and the 2 here, and that's because of the position of the 4 that I have to have available over here. So I've spoken about how the major pivot off of this pitchfork here, off of the 1 and the 2, this is basically determined so much of the subsequent price action. It's kind of unreal at times as to how accurate it is, but it's just what you tend to see. So let's take this channel here between the 23.6 and the 23.6 either side of the median line, pinging between these channels. You've got, once again, resistance at the 61.8 here, 23.6, 78.6, and then we've basically worked our way, as I pointed out, all the way across the pitchfork back to this golden ratio here, which has gone 61.8, 38.2, 61.8, somewhere in between the two, 61.8, back, and then finally it's broken that support, come back and back tested it. So what has previously been support has now become resistance. So resistance to what end? Well, it could be final move down in the C to the 89 perhaps, still staying in the E, staying above the C, but coming down to a major fib level. You've got the 78.6 here as well, you've got the 89 here as well. Okay, so we could just, or maybe we're just trying to work our way down in a bigger pattern to the edge of the pitchfork and still come in before the C and still get that E. So it's all of this sideways movement could still stay within this long-term geometry, is my point. Now what won't be the case, another reason why I've always favoured this as the primary, is that's highly unlikely to be the case if we break down. Okay, and we're coming deep down here in a 4, or perhaps this was the top and we're coming down into a 2, at which point this pitchfork breaks down completely. So another reason why I tend to favour the primary. I'm not saying the alternate can't happen, it can, we wouldn't have it unless we felt it was possible. Okay, so is there anything else I want to talk about before I move on? Now, I mentioned that confluence multiple times. So let's have a quick look at some other counts. Right, we've got our primary and we've got our alternate, but we still have some alternatives still lingering around. So I'm just trying to remember which ones are which now, to be honest. I've kind of given up on tracking them. Cycle top we should deal with first, because what this allows us to do is basically use everything we've got for our alternate count inside of a longer term, larger count. Right? So if we do get that big nasty zigzag down here, right, then we can say that this is the cycle top 3, 4, 5, okay, and then all of this is just a giant double zigzag. Honestly, if we get that deep alternate count down, because it could stop short, in which case I'd be happy to say 4. If it comes really deep, then I'd be much happier saying 2. Okay, so that's why it's still hanging around this count. Is it's back down here, deep down in the list somewhere. I'm not giving it up just yet because I want backup ideas. Bullish count I haven't kept up to date, but it's a struggle to really make it valid. I guess the only thing I could do here, very vaguely, is I could put a 1 here and then a running flat as a 2 down here, perhaps. Okay. So we've gone A, B, C, A, B, C, and then 5. 1, 2, 3, 4. Somehow getting that to count as 5. I'm not saying I necessarily can get it to count smoothly. I honestly don't think I can. But you know, it's a backup of a backup idea, so I'm not going to stress over that. I'm just going to keep it as an option. Okay, and then therefore that would become A, B, and this would be C. So if we do get some rip-roaring impulse out of here, blah blah blah, then this is potentially a count. 3 flat into 4, 1, 2 into an extended 5th. That's how I would interpret that. The most bullish count I've seen out there, which is not my own, but I've seen it used out there, it's still just about hanging in there at the moment, and this is the idea that we've had 1, 2, 1, 2, 1, 2, 1, 2, 1, 2. But that's very close to invalidating now. Right, so that's everything I think I want to cover here on Bitcoin. Once we get this pattern over with, up or down, breaks up, breaks down, triangle completes, doesn't complete, we can then start to project longer term targets and track price data and where we can start to project where we may end up, right? But we can't really do any of that yet. So to sum up, watch these levels, watch the price action. Do we break it impulsively down? Do we impulse and break the D higher? Do we come to within this level and then reverse? That's really what we're waiting for. It's probably no more than a fortnight or two, a week or two, before we get some kind of idea as to what's clearing up. Could take longer, but about a week or two now, a couple of weeks should be about right, I think, to see this play out one way or another. Okay, well now we'll move on and have a look at Ethereum. Right then, so here in Ethereum, in log, the triangle looks nicer than it does in Bitcoin, to be absolutely honest. First of all, I'm able to get an ABC rather than a WXY into the A. I'm able to get a ABC into the B. I can then get a WXY in the C. It's a bitch and it looks ugly as hell, but that kind of fits because it's the wave C, and the C often has the complex structure in a triangle. We then get another zigzag, ABC in the D, and now we've got the exact same situation as we've got in Bitcoin. We've got a 5 wave count and we're looking at either a flat that's already played out, and we're going to come down here 1, 2, 1, 2, we're going to work our way down 3, 4, 5 into a C. I don't really think I need to go over that again. It's the same idea as in Bitcoin. It just doesn't have the propensity to it could be an expanding pattern still, I guess. It could be a larger triangle, but I feel that this looks better overall. So if I just show you one of the reasons why I believe that, we get a golden zone retracement. There it is again, 50 and 60. 50 and 61.8. 61.8 to the tick for our D wave. Bing, right there. And that's really quite pretty. Now in linear terms, it goes beyond the 50, which is also reassuring. Alright, that's the one thing that makes the Bitcoin triangle a little weaker. But the fact that you've got two things, both with an expansive B wave high, both seem to be counting as a 3-wave structure to that swing high in Ethereum and Bitcoin, very much leans into the idea that this was either going to be a running flat or an expanding flat of sorts, or it's a triangle, a running triangle in this case. So that golden zone retracement I like a lot. Now if I come in and I find the little pitchfork I've got, not that one, okay, this one. Now if I switch this back into actually I don't want this in log. If I switch this into linear again, make sure this is placed correctly. I'm sure it is. Yes it is. So check this out. I could just take that trend line and put it down here, right? But I don't think that trend line is being very well respected. But we can see here how inside, if we just turn the count off for a moment, so we can let the dog see the rabbit. Where are these two come from? Put those into the primary folder. that makes sense. So this pitchfork here is operating as resistance as well. You can see how we've come through the edge of it and wicked for it before, down to the 61.8, up to the 89, down to the 50, up to the 61.8, down to the 23.6, up to the 61.8, down to the 38.2, up to the 61.8, down to the 50, up to the out of bound, blah 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 blah. So another move down, perhaps to the golden ratio, right, would stop us before this level here, which is the equivalent of the C, and then that could complete a triangle with an underthrow of the E again. So it's all up for grabs really at the moment. Now that's the long-term count. It's a bullish primary. I don't think I need to go over anything else in the shorter term. Let's just come in for a moment and have a look at it, see what I've done. 1, 2, 3, 4, 5 A, 3 into A, 3 into B, 5 into C for a flat in the B. So I feel like that's already been resolved. Okay, to some degree. Now this is tricky now. This is getting a bit messy because without the idea of expanding, it could still find a way to expand back higher. Okay, something like back to that trend line before coming down to the C, but it feels like it's done enough already. Okay, so how would I want to express this? I think that would have to be 1 A, B, C into 2, get that expanding pattern, and then 1, 2, so on and so forth. It's the same idea as we saw in Bitcoin, or one of them that we saw in Bitcoin. And if it does the opposite, if it holds support at this rising trend line inside of this channel, and it continues higher, right, in an impulse, we're going to same deal as before. We're going to be watching that D wave high. So we'll put the same levels here, shall we? C and the D. We've already got the C down here with the 2160, and we'll do the same up here. These are vital levels for the count as well. If they go down, we can have a rethink as to what's going on. And that. Where is this hidden? It's inside the primary. Of course it is. So there's two there, isn't it? There we go. So we got our levels set up as before. We could just be doing a nice simpler structure. A, B, C, B, 1, 2, 3, 4, 5, C, and then we're done. And we're out of here and we've finished the count in an E of a triangle, and it's all over. So in the meantime, that's probably my best shout. If it expands higher, it could be a more complex structure of A, B, 5 into a C into a flat, and then 5 down. Right? If it clears the B wave, if it clears the D wave top, that level there, 3582 spots 16, then it could be something else, something more bullish. I don't think the D wave needs to come higher here in Ethereum. That would be my point. I think it's done enough. Alright, so a bullish move out of here, I would really lean into interpreting it bullishly. Okay, so let's tidy this up. Put them into the primary. Okay, so alternate count. Now I've got a different alternate here than I have in Bitcoin. Now the reason I've done this is just for a bit of variety. Okay, because it's really not going to end up all that different. That's my point here. It's going to take us to new lows. It should take us to new lows. Okay, 5 into C into 4. So this is still a valid expanding flat. 3 to here, 3 to here. Okay, 1, 2, 3, funky looking 4, 5. Big flush down in a 5. Right, now it ain't pretty, but if we move the whole thing to one side, right, it does look like a flat. Okay. It's just a big sideways structure. What we don't like about it is this final impulse, 1, 2, 3, 4, 5. So I'm not going to say that this is more or less likely than a double zigzag. I think the double zigzag works perfectly fine to express it as an alternate. I have no problem with that. I just figured since we've already got that in Bitcoin, and this is still valid as it before has not retraced beyond 3975.55, and we can get a free wave correction in here for a 4, I might as well just keep it. Okay, as an alternate, because it gives us a different way of looking at things that we don't have available to us in Bitcoin. So that's the alternate. Now let's look at an uber bullish count, right? Excuse me. Now we can ignore that 3, ABC 4, that's 1, 2, so we don't want that 3 there. And basically, let's just turn off the larger count. Here we go. So this is pretty stripped down, pretty simple, but it is still valid. Going back to 2015 here, we've got a 1, 2 at cycle wave degree. Actually, I can downgrade that into primary, I realised. But I'm suggesting that the primary 1 isn't even in here. That seems pretty extreme, to be honest. 1, 2, 3, 4, 5, intermediate 1, intermediate 2, 1, 2, minor 1, minor 2. Now, like I said, you could upgrade this to primary, cycle into primary, or primary into intermediate. It doesn't really matter. But what we see, instead of looking at this as a 3-wave structure, we look at it as a 5-wave structure. Now we've already got a bearish count which takes us lower in Bitcoin, which suggests that this is the top. So we don't need to waste our time with that here in Ether either. We're looking at different possibilities that we don't have. So this gives us 5 into 1. This, I think the complex fits best to get down here for the 2. And then we've gone 1, 2. 1, 2, 3, 4, 5, 1, 2. 3, 4, 5, and we'll come out of here violently, and this is all 1, 2, 1, 2, 1, 2, 1, 2, so on and so forth. Now let's just add to this pitchfork basic original full pitchfork. There we go. So you can see here on the full pitchfork that I have set up on the 23 6s from the median line here, this is where we're channeling at the moment. Support, 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 support. So this line has the same relevance in Ethereum as the 61.8 in Bitcoin does, right? You know how it was basically acting as support, difference being Bitcoin broke that support, backtested its resistance, and has a route to head lower. We may see the same happen here in Ethereum, but for the meantime it's holding. And for the meantime, this is 1, 2, 1, 2 expanding flat, 3, 4 tiny zigzag, 5 into 1, into a zigzag into 2. So this is still a possible count. This is like an uber bullish count. So I've got that as a second alternate, I guess we could say. So in order, primary is the triangle. Alternate is we're going to go lower, whether we go WXY or whether we go 1, 2, 3, 4, 5 in this expanded flat. Then we have the bullish count as a second alternate. I don't think I need anything else after that, really, to be absolutely honest. I think that's all I've really got for you guys now, to be honest. We've been going sideways for so long now. At least, you know, we've gone from this being the level to watch, and then this being the level to watch, and then this, and now it's this, and so on and so forth. And all of this leads me into thinking that we're just narrowing into a triangle, right? We're just sideways consolidation that's just taking forever to resolve itself. It feels like a triangle. Okay, I've covered cycle wave 3 targets before, and that's it. I'm going to leave it there, guys. I hope you have enjoyed this technical analysis of Bitcoin and Ethereum. I've been trying to throw a couple of extra little things in here and there just to keep you entertained, as it is getting a bit bloody boring, to be honest now. Shall we just take 5 minutes to have a look at the moving averages and some indicators to see if there's anything here which stands out to us. So let's bring up our moving averages. Daytime frame, price support at the 250 has arguably become resistance. Got back above it here, back below it here, right below the major moving averages. But what do you notice? Expansion between the moving averages, a smaller expansion between the moving averages, smaller expansion between the moving averages, slightly larger here, slightly smaller here, even smaller here. A lot of this points to the moving averages coiling up together, which is typical of a triangle as well. So I know I keep beating the drum. I could be wrong, right? And I've got counts in case it is, but it's behaving like one, is my point. Let's have a look at RSI. Nothing screaming bullish here at all, is there, at the moment? Feels quite corrective. Losing bearish momentum here back below zero bound on the MACD. You know, we have got these series of higher lows. You can see how we basically bullish momentum, bearish momentum, less bullish momentum, more bearish momentum. So we have been weakening. But now we could, you never know, this could be the moment where we haven't got a crossover yet, but we could cross over, get back above the zero bound, start getting some green bars on the histogram, get an impulse out of here. Yeah, touch and go for the minute, but nothing screaming that we need to be convinced one way or the other yet. Let's come out to the weekly time frame. Let's bring up the VP VR as well. Weekly time frame. Back into neutral territory in the RSI. Nowhere near oversold, nowhere near overbought. Volume is still not to the it's still not present. You know, dropping off the whole time as moving averages, you know, coalesce. As the pattern narrows and volume drops off and momentum flattens out, all these things point towards it being a triangle and looking bearish towards the end. These, you know, because you want people to try and short it, don't you? At the end of the day, now they might be right too, they might be wrong. Monthly time frame, we've now gone in after crossing over on the MACD with 3 weeks and still growing in bearish momentum to the downside, so far above the zero bound still here. We've never really gone below it. Well, we did for a while back in the bear market 2018-19. Moving average wise, we're basically closing along, not closing, we're wicking along the 20 exponential monthly average here. 60s all the way down here at 1362. A big breakdown, a big zigzag could bring us back to that, roughly in line with the prior high as well, similar to the 20k level in Bitcoin. Okay, so let's come over and do the same for Bitcoin now before we leave. Okay, so back below that 250-day moving average. Once again, big gap between the 10, the 20, the 60 and the 250. Smaller gap between 10, 20 and 250. Smaller gap between 10, 20 and 250. Going from the peaks and the troughs here, basically. Smaller still, smaller still. Right. Contracting moving averages over time. Getting closer together. Yeah, let's just bring that 60 back up. Volume, same, declining the whole time throughout the correction. Nothing really here, is there, other than that major structural support. Let's bring up our indicators. Saw that connective triangle here. What we've got, A, B wave triangle, C in a zigzag. That came up clear as a bell over the shorter time frame, as it did here in the MACD. Don't need that anymore now. Below the zero bound, barely crossing over on the MACD, just looking really weak at the moment. We came back to oversold with meandering in bearish territory somewhere around or below the 48 level on the RSI here at the moment. Below all major moving averages, looking pretty weak. You know, but we've looked pretty weak many times before. Let's come over to the weekly. Alright, so similar to the 60 exponential moving average on the weekly time frame, the 250 here for Bitcoin is somewhere around 23 grand. So like I said, between 20 and even 20 and 26, 28, in that region. If we were to break down in a zigzag, I'd expect to find support. Deepest, I would expect to see it come back and test structural support at 20k. Right. Not fully down into oversold yet though. We've gone overbought, not quite to oversold on the weekly, back into overbought, not quite to oversold. Maybe one more big thrust down would do it. We'll have to wait and see. Let's have a look at the monthly. We're now into our fourth week. Our fourth month. 1, 2, 3, 4 growing deeper bars on the histogram here, on the MACD, with a big cross over here. No sign of decelerating yet, so still looking quite, on the longer term time frame, looking pretty bearish. Alright, still descending. Now that can turn around in a hurry. Right, 6 months from now we could be back on the other side of a crossover and heading higher. Okay, back with major bullish momentum, but for the moment it's generally not a good sign. Same as in Ethereum, we're holding that 250, that 20 exponential moving average here. Wick, body this month. We're bodying on it currently. Break below this level, that would look pretty bearish, but that could be all we need to complete a triangular pattern, right, and turn this whole thing around. Right, so just got to keep that in mind. Alright then guys, we will now call it there, having done some classical analysis at the end of the video here. If you're new to the channel, you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. As always, an enormous thank you to my Patreon subscribers. I hope I've given you really good value for money this last couple of weeks, now that I'm back at work again, now that my little one is doing better and I can take the time to get back to work. So we'll keep up the good work going forward. If you are interested in joining the Patreon, there's a link in the description box below. Head over, have a read of the tiers, see if there's anything you're interested in, and feel free to sign up and get access to all those other assets and videos and things that aren't available here on YouTube. But I would suggest that you wait till the start of the month to sign up. And if you're not following me on Twitter yet, please do so, as whenever I upload a video to YouTube, I always announce it on Twitter first. Take care of yourselves guys, and I'll be back with you next week. All the best. Bye bye.